One of the things we need to do for our SMSFs is create and keep updated an investment strategy. Some of the things that you should consider is the risks of your investments, like the risk, like it's basically just telling it how it is. If you're investing in cryptocurrency, noting that that might be extremely risky compared to leaving it in cash, which also has its risks with inflation, like all that sort of stuff. You just need to basically have a common sense documentation of the risks and why you've chosen that for each of the members. Diversification of investments and benchmarks for classes of assets. So you kind of need to set in your investment strategy. You're targeting 60 to 70% of your fund you want in real property, in property, whether it's residential, commercial, you can specify that. And then you want 40% in cash because you want a bit of liquidity there, or you have to document what you're aiming for to plan that out, and also keep it up to date to make sure that your ranges that you're aiming for is what reality looks like. Now, do keep in mind, if your SMSF holds property and your property has increased in price, in value, then you may have a larger portion of your fund in property, and it may be on the upwards range of your investment strategy. So again, it's important to make sure that your investment strategy is kept up to date with the market values of your fund. You also need to document your intended return on investment. So, hey, is your overall fund targeting the cash rate plus 5%, or an overall return of 20% net of tax, or whatever it is? It needs to document that. Borrowings. So do you want to explore borrowings in your fund, usually with property there? Insurances. So it doesn't mean you have to have insurance in your SMSF, but you do need to document what you've done with insurances. So yes, Ben Walker has insurance in his fund. He's got XYZ insurance because of these reasons. Or no, Ben doesn't have insurance because he's got cash outside in the event that someone dies, or whatever. Like, whatever the scenario is, needs to be documented. And then liquidity. So you need to document, again, it's just sort of common sense or a bit of planning there with liquidity and cash flow requirements. If you're in pension mode, you need to make sure and account for cash to pay out pensions. So do keep that in mind. It's not set and forget. We need to review that each year.